Well, it's definitely the PSU stocks that are in focus, and they are definitely the ones that are making all of the headlines at this point of time. Within this particular space, yesterday you had Morgan Stanley going ahead and upgrading most of the PSU banks, and not only Morgan Stanley, today even CLSA has gone ahead and actually upgraded Bank of Baroda. Clearly, SBI remains a favorite as far as most of the foreign brokerages are concerned, but now their focus is shifting towards some of the smaller PSU banks as well. What CLSA is saying is that number one, they've gone ahead and upgraded Bank of Baroda to a buy from the Outperform stance that they had earlier, and it's a very significant rise as far as the target price that CLSA has is concerned. They've increased the target price from 80 rupees a share to 125 rupees a share. Now what they're saying is that they are mainly doing this particular upgrade on the back of the fact that they see a benign corporate credit cycle ahead. They do have a few concerns as far as Bank of Baroda is concerned. They say that unlike SBI, Bank of Baroda has actually lost market share over time and may not really qualify as a structural story. However, what they're saying is that the rising tide will definitely lift all of the boats. Now what they're saying is that cyclically, like all corporate banks, corporate NPAs contributed almost 75% of the slippages provisions in the last 5 years for Bob as well, and that cycle is something that is finally turning. Credit costs are normalizing, and they expect ROEs to inch closer to 10%, and they say that coupled with the less probability of a dilutive capital raising in the near to medium term, this is something that is actually driving their upgrade. They are saying that the 125 rupees price target is based on 0.75 times adjusted price to book, which again is almost 20% lower than Bank of Baroda's historic trading range. So they're saying that valuations at this point of time continue to give a certain amount of comfort. They say, their preference for SBI remains given its higher asset quality, certainty, as well as more structural drivers. Now what they're saying is that in terms of PPOP growth, they say that their 22-23 growth expectations for Bank of Baroda are 6% and 7% respectively. They expect a modest 6% PPOP growth over 2022 to 2023. They're saying that along with a normalization in credit cost to 140 basis points by FY23, they expect ROEs of over 10%. A potential improvement in growth recovery and rising rate impact on NIMs can actually lead to further upside, they say, as far as theirs as well as consensus estimates are concerned. They are saying that with the recent 4,500 crore of capital raise, Bob's Tier 1 ratio will improve to 10%, and with an improvement in core profitability as well as moderate growth expectations, they expect the Tier 1 ratio to organically accrete over FY22, FY23. They believe that reduces the risk of dilutive capital raise going forward.